Well, according to our time, it looks like it's 8:30 a.m. So we'd like to kick our presentation off. Thank you everybody for joining us this morning. So this is a part of a short form prospectus offering, which is an exciting event for Solution Financial. We went public back in 2018 and have had steady growth. And this is the first kind of full retail financing that we're doing. Of course, we're in COVID, so we've adopted a virtual roadshow of sorts. So thank you again for joining us today. First of all, it's gone through the full vetting of the securities commissions, of course, and our partners and agents at Industrial Alliance. So there's a lot of cautionary notes that we would point out for everyone to look at and to understand carefully. My CEO joining me here today, Brian Pang, is the founder of the business. If anybody's familiar with the Lower Mainland, I know I live in Richmond, so meeting Brian really revealed a very interesting story. So I'll let Brian introduce himself.
Good morning, guys. I'm Brian Pang, the founder of Solution Financial. I started this company in 2004 when there's not many lenders lending to international students or new immigrants. I started to see the huge opportunities, so we start brokering our deals to a third-party leasing company where the OEM financing are not offering the lease quote to my clients. So, and after a few years of retained earnings in 2011 and 2012, we start to writing this paper ourselves by using our retained earnings. And for another 3-4 years, we have established a very unique leasing formulas on writing these lease papers to the international students. And we start thinking about bringing the company to the public listing in TSX Venture. And Sean Hodgins joined us as a CFO and help us bringing the company to the public. And we engaged with IA as a sponsorship, as an agent to help this going public exercise. And in 2020, around 2 years after we went public, Randy Smith joined us, and we invite him for further expansion in Ontario, which is where is a huge market, way bigger than in Vancouver. So we hope that this financing can help us expand our business in Ontario. And I'll pass it to Randy for his intro.
Thanks, Brian, and thanks, Sean. So by way of background, I've spent my entire career in the financial services industry, including banking, private debt, equipment leasing, and automotive financing. Over the last 35 years, I've founded and expanded and exited several national leasing businesses in both Canada and the United States. And I'm currently involved in equipment leasing, financing to the Bitcoin industry, and subprime auto. These businesses in total, we have about 280 million in leases and loans across the country, coast to coast. And I'm really quite excited to join the Solution Financial Board and Brian and Sean's management team, really to contribute to the growth of this Vancouver-based business historically since 2004, as you said, Brian, across the country, first in Alberta, and now most recently expanding into Ontario. So I'm quite excited about that and the growth opportunities there moving into these larger markets. And just wanted to thank everybody for dialing in this morning. And with that, I'll turn it back to Sean.
That's great. Thank you, Randy. So just an understanding of the business, most of us would think of automobile leasing as a situation where the purchaser of the vehicle can't necessarily afford to buy the car outright. So that's where the Solution Financial story differs considerably from that very typical or non-prime lending type situations. So in this circumstance, there's typically very affluent new immigrants or international students that have arrived in Canada, or business owners that love high-end vehicles and like the idea of upgrading their vehicles very regularly. Well, as you might imagine, that's very cost prohibitive if you're buying out the vehicle and then having to resell it or buy out the lease and resell it. So instead, and in fact, I see this as a really a much smarter way to own a vehicle is instead you partner with a group like Solution Financial and effectively rent the vehicle. And that allows you a tremendous amount of flexibility in upgrading. So we've historically focused on this affluent immigrant international student market. And you think that's a bit of a niche, but if you understand the Canadian market, it's in fact a huge population. Certainly COVID and international relations with China has somewhat slowed that population, but it's still a very prominent part of our university environment and bringing immigrants into the country. So we've capitalized on that opportunity significantly. And we've developed a very unique equity-based leasing structure that allows for this very flexible, upgradable lease arrangement that's agnostic to the particular brand of luxury vehicle. So you might be leasing a car from Mercedes, but then want to move to a Porsche. So that's very much what Solution specializes in. Our business model is relatively straightforward. We went public in order to raise additional capital. So when one of our target clients goes into a Porsche dealership or another high-end dealership, they will typically ideally be able to get in-house leasing, but because many of these clients have very limited Canadian credit history or just simply don't qualify for those programs, that's where Solution can step in. We specialize in being able to work with these high-end dealerships to be able to get quotes very quickly. And we use our capital to buy out the vehicle and then lease, effectively rent the vehicles on traditional lease agreements over 24, 36, 48 month terms. And we make a profit on that. And that's our in-house lease income, which we'll look at the numbers at the end, is approximately 34% gross profit, as well as when the leases come to renewal, or if the customer wants to upgrade, which we proactively encourage, there's also an opportunity to make a profit margin either by leasing the vehicle to somebody else, or many of the dealerships that we work with actually really like to control or get access to those vehicles, and we make a little bit of profit on that as well. Then we have things that we put in place to make sure that the vehicles ourselves, because we co-own these vehicles with the customer, to make sure that the vehicles are very well maintained and certainly don't get lost. So we have GPS tracking that goes into all of the vehicles that we have, which is relatively unique in the industry. And we have limitations on mileages, and we proactively work with the clients to make sure the insurance is in place, very much making sure that the vehicles are in good condition, because the value and carrying value of those vehicles is important. Anything to add, gentlemen, before we move on from that?
Maybe we can see any question from the Q&A that so far we can answer it right now.
Well, we'll let those Q&A questions trickle in, but we'll just keep moving through. So we went public. This is a fantastic story for me. I know many of the people on the call here have traditionally been in the tech world, but this was a phenomenal story, a company that's already revenue generating, profitable. So we are raising capital and constantly raising capital to grow our in-house portfolio, which is making sure that we can buy and finance these vehicles. So when we originally went public, we had a portfolio in and around $6.5 to $7 million. And in the last couple of years have been growing the portfolio in exactly the way we just described. So certainly there's been a slowdown in 2020, thanks to COVID. But as the vaccines roll out and our expansion plans into Ontario and last year, or the late 2019, we expanded into Alberta already, should continue to see a growth in this carrying value. And running into pre-COVID, pre-going public, we were seeing tremendous growth in the brokering of vehicles, which is why we went public in the first place.
So Sean, yeah, we have a question that just came in to touch on the expansion plan and the exit upside for investors, also plans to move to the big board. So for sure, we've enjoyed 8 consecutive profitable quarters, and we're really of the size now where we can move towards the TSX, and that's in motion now. Sean might have some additional color on that. And really, in terms of the expansion plan, I think it's pretty it's a very simple expansion plan, because we've got a business that Brian founded in 2004, and really has been 100% concentrated on the Vancouver immigrant student, foreign student market. So simply by a geographical expansion into those other cities, especially Toronto, that has a considerable increased number from what Vancouver has, that'll really be the primary expansion plan, is just geographically get our product out to new Canadians and immigrant students that are looking for our services. So Sean, you might have some more to add color on the big board or the expansion.
Yeah, no, great question. So we're really not a venture story, but we went public obviously on the venture exchange, the TSX Venture. So a part of our expansion is just this growth and differentiating ourselves from the venture exchange. So we've recently applied to move to the big board, and that does a lot of great things, and a little bit of why we're doing this prospectus offering. When we did go public, it was a non-brokered private placement, so mostly targeting accredited investors. This is the reality is we pay a dividend. It's actually 9 consecutive quarters of profitability. And we wanted to do this prospectus offering to open it up to the general public, meaning that any investor who's interested can participate in this new issue offering rather than just buying and selling in the stock market, because we're needing to raise this capital. So as we move to the big board, we're hoping, which is very typical, is that institutional investors may then be able to participate. Many of the institutional investors are very conservative and can only or will only look at investing into companies that are on the bigger exchange. The long-term exit and upside for investors is really this growth story, continuing to grow. We'll look at the slide on the historical stock price performance, and very much the rationale of bringing Randy on and other key hires and growing this story and doing more of these road shows is to get more market awareness, increase the demand for investment into the stock, and just see, hopefully, obviously these things have some element of risk, but I think the underlying value will hopefully equate to long-term investor returns. Yep, just keep moving on, and feel free to continue to ask these questions. It makes it a little bit more interactive. So this is just a snapshot as of our last year end of our holdings. So as I said, we're buying the vehicles and leasing them out. And then we do multiple generations of vehicles. So we can lease and finance multiple, not just new vehicles, which is typically how we get new originations, as they're called, but renewals and vehicles that are coming off lease, we can renew. And that's where the lease carrying value will over time drop down.
Sean, there was another quick question that came in, a really good question. Just in terms of the growth, has it been stunted with immigration and slowdown of international students coming back to Canada, primarily from Asia? So great question. And really, you can see from that prior graph that we had lots of expansion in growth of the portfolio right up until our friend Mr. COVID hit. And for sure, there's no question that international travel period has been stunted, and it's impacted our continued growth. What's really telling is that even with the pullback in terms of new students coming in, not just from China, but India and other places around the world, we still maintained some growth up at the $25 million range. So I suspect that as the world comes back online, and we're certainly already seeing that with some of my conversations with folks in the United States, you know, some of the airlines have already brought back all of their pilots and flight attendants and counter gate ticket agents that were furloughed. So I think that's an indication to come. Canada's a little bit slower, of course, as we've heard, but we're going to get there. And I think there'll be a direct correlation to the winding down of the pandemic, to increased immigration back into Canada and foreign student activity. You know, but that's yet to be seen, of course.
There's a fact that I may be able to brought it up. The international students are more focusing on the high-end luxury vehicles in Canada, is because they're way cheaper compared to their in China or in Asia, because the tax that their originating country are taxing these high-end vehicles for almost 100% or even over. And so in Canada, they look at it like they're in a half price. So that's why we named it the luxury vehicle capitals in North America. So the demand on these luxury high-end vehicles are here, and international students in China or in Asia, they tend to come to the Canada or US or UK for English-based a country that they don't have to learn another new language like Germany or Switzerland, that they don't have to learn a new language. They can just basically communicate with their English and get their education in these countries. So we are one of the top choices over these educational country.
Yeah, no, that's, yeah, building on that, we certainly, you know, we've all lived through the Trump administration and even with Huawei, the challenges with China and Asia, but I think we're pretty comfortable that as things settle back down, COVID gets under control, hopefully international relationships rectify themselves a little bit, that we'll see this resurgent and cooperation internationally to see the international students. Canada and Australia are the two #1 location, and the United States, of course, for these international students. And yes, indeed, we've all been impacted by that, but that's the telling story here, as Randy alluded to, that we're continuing to see demand. We've seen a pickup in the small business owner participation as opposed to the international students, and we have a lot of leeway there and have programs that we can implement, but these are all we hope to see, and we'll expect to see a return to the international student flow, and immigration is a critical component of the growth in Canada as well. So let's just keep moving on and keep these great questions coming. So our story from an operational perspective here, this is our lease income and this kind of ongoing growth and correlation of our net income from leasing out the vehicles. The nice growth story here is kind of Randy suggested, is that, you know, many public companies grow by way of M&A, mergers and acquisitions with other targets. Because we specialize in a little bit of this niche luxury car business, we can grow simply by adding a small footprint recently into Ontario, and prior to that into Calgary, with not a lot of overhead or operating costs, which is really just our general and administration and sales and marketing costs. So that's really the story, is can we continue to grow the availability of offering these unique leases, as well as we have a proprietary leasing system that is designed to make it very, very easy for the car dealerships, the managers at the dealerships, to be able to get very quick quotes back from us. And so we very much specialize in making that really, really easy for the car dealerships that we work with to be able to work with these clients to get quotes that are comfortable for everybody to enter into quickly and efficiently. We'll move into the timeline here. I'll just focus on in the 2019-2021 year. We brought on John Gowans, who joined our board of directors, and he was very helpful in our expansion in Calgary. In fact, he introduced us to Randy, and we're very much focused now on this expansion plan and raising this capital to enter into the Greater Toronto market and this graduation to the Toronto Stock Exchange. Couple of key questions here that might come up is anti-money laundering. Most of you may be familiar with, the luxury car leasing has been associated with some of these behaviors. We're very sensitive to that. In fact, when we went public, we now have an audit every year, and we ensure that we do not handle any cash. And we're looking to work with those clientele, obviously, because we want to make sure that the vehicles that we're leasing are very well maintained, that we're targeting and very much aligned with making sure that we're leasing vehicles to people that we think are going to look after these vehicles. We do all of the standard credit checks. We look at any sort of behaviors, driving records that might be inappropriate for our clientele. And that's been very much our keys to success here, is making sure we do that very well.
And one more thing that I have to mention, that is 90% of our business are working with franchise dealers, reputable dealers, and they already have their anti-money laundering program in their in-house. And we believe that those reputable dealers will be able to filter out those bad guys, I would say. So, and once their due diligence is done, and then the deal that they send it over to us, and we do another time of due diligence on the other background check. So I would say it is almost clean as they went into the bank. Pretty much we have the same standard with the banking program on the AML. And also we have the annual AML audit every year. And we also provide that to the TSX. So the worry about this AML in our business is very minimal.
That's great. Just keep moving through here. I think we're getting pretty close. I see another question did come through. Mark, thank you. Just give us a second. We'll just see if we can get to that section here a little bit. Here's our insider holdings. So this is another reason that we're doing this prospectus offering, which again opens up the availability to any retail investor to participate in this new issue offering. Is that, as you can see in these slides, that there's a lot of insider holdings. So that's very much the goal here. Historically, the company's stock has traded very thinly because there's just not that many shareholders. So this is very much a part of our growth as being a public company and maturing to the big board and getting the story out more widely to investors, is to ideally increase the number of shareholders, get more participation in the market. And that's just a standard growth story for any public company. So just want to touch on that point. And then why are we all here? Well, this is the historical performance, and obviously historical can't be guaranteed for the future, of course, but it's a little bit of the rationale of, getting involved as a shareholder in the company. We want to have good shareholders that are in for the long haul. Ideally, this is a great retail investment story. It's available as an RRSP investment. It pays a dividend, and it isn't a 10x type story, or many of these venture exchange stories are all about, what I would feel is very much more risky story, perhaps a larger immediate return. This doesn't really qualify in that category. It's this let's continue to grow. And then to speak to Mark's question here about our growth strategy here is that this isn't really an opportunity to M&A. There are some competitors out there, of course, but we see it being very strategic growth, that we can open up an office in Ontario for a relatively low cost, start developing relationships with the dealerships, many of those dealerships we know already, and grow just organically. And then hopefully we will see a continual increase in the share price on simply our continued organic growth as a business. So that's very much where our current strategy for that is in play. Anything to add, gentlemen, before I move into just kind of the rest of our team and go through our term sheets?
No, I think that's good, Sean. And you highlighted a point there that one of the nice parts about expanding into Ontario, and even Alberta for that matter, a lot of these dealer groups already have other dealerships in Ontario. So it's a very complementary expansion into these other markets to service existing dealer groups. So I think that was a good thing to point out.
Great. Okay, well, just quickly, you met Randy and Brian and myself. John, I mentioned as well. Vincent is our Chief Operating Officer. He pretty much deals with all of our lease operations. Desmond is on our board. He's also our partner at Macmillan. And Kerry Myers, many people might recognize the Meyer Insurance name. And in fact, he is the founder of Meyer Insurance that was bought out a few years ago, but great connections and contacts in the auto insurance and insurance business. So that's the team currently right now. We've talked about ourselves. Here's a recap and bios for everybody. But yeah, let's move on to the term sheet and the specifics of this investment now. So this is a best efforts offering. So it's been a real educational experience on this prospectus offering. I haven't done one since I was at PricewaterhouseCoopers many years ago. So it's been a very interesting experience of working with the Securities Exchange Commission. The purpose of doing this roadshow is to get the word out there. Anybody on this call could participate. Ideally, these prospectus offerings are as simple as calling your broker. If you use Questrade, it's as simple as logging in and pressing a button and placing an expression of interest or putting an order in that would close when this offering closed. However, we've had a lot of iterations with several investors that have inquired in how to participate. That's another purpose of doing this roadshow, and we're happy to answer any questions about how you participate. But that's the exercise that we're in here, get the word out here and how you can participate. So what we're offering is what's called a unit offering. This includes a common share, which is what you would see if you log on and see what our share price is trading for, as well as a warrant. So in this case, it's a half warrant at 50 cents. So we've had some questions. Well, you're offering this unit offering at 40 cents a share. Right now, the stock is trading, I don't know, 45 cents, 46 or 47.
Somewhere around in there. So
theoretically, yes, if you were to invest into this, you're going to receive a common share, and you could immediately sell that. And if the market demand, obviously the market is just simply supply and demand on any day. And that's the rationale of putting this offering out there, was a little bit of a negotiation with Industrial Alliance and setting a price that will be very attractive to new investors who are participating, and ideally see the rise. Hopefully the stock will stay at 47 plus, so people participating will see an immediate gain from that. Of course, we have no control in the markets on the supply and demand impact there, but that's just an obvious explanation of what's going on here. The warrant is if the stock trades above 50 cents, that you have the ability to exercise that warrant, which would allow you to buy another half warrant. So if you bought 10,000 shares, you could buy up to 5,000 additional shares using the warrant at 50 cents. So if the stock was trading north of 50 cents, in the next 12 months, this was an added sweetener to our offering that would allow you to buy at 50 cents and ideally sell those shares at more than 50 cents. So this is a very typical structure for these new issue offerings and what we're currently offering it at. The minimum amount of our raise is $3 million and the maximum is 10. There is an over allotment which says if we reach those maximums, then Industrial Alliance has the option to increase the amount that's raised. The use of proceeds is to continue to support our operating lease capital and very much to align with our expansion into Ontario. This offering is available to all provinces except Quebec right now, and it's eligible for your RRSP, RESPs, et cetera, et cetera. So again, the idea is to make this very investor friendly. There is a commission of course that's paid to your broker, as well as if you did want to directly subscribe to the company, and we have circulated, or please inquire, we have an FAQ and how to participate document that we can send you that allows that goes through the process of either interacting with your broker to get a placed order, or you can subscribe directly to the company and come in under our president's list participation, and we can chat about how that works. The closing date is currently set for April 20th, which is a week from now. So hopefully everyone is interested in, and the kind of next call to action here is to support you in hopefully participating in this investment round. That's pretty much it for our presentation today. I would encourage any follow-on or questions while we have your time. We did set for a little bit more time, and we're happy to take some additional questions. But other than that, I think that's it for us, unless there's anything to add, Randy or Brian.
Not too much. If rather to see any questions from you guys, so we can answer that accordingly. Instead of Sean keep.
I think there's might be one more question over here. I think we're good.
We're good.
Good, excellent. Well, thank you. I think unless people are typing out here, we'll give it a couple of more minutes. But yeah, thank you again for everyone's time. This was a interesting experience for us to do this.
I think it is
Randy Smith raised.
Just one more question came in.
Oh, great.
Just on the competition side. Who's our competition? Really, and maybe that's probably best to you, Brian.
I would say the FAV leasings are currently a big player in this market, and also travelers are another big player, but they are not really focusing on international students. I know they don't have too much appetite on international students, and same as FAV, but they are still a healthy player in the market. And another one I would say it is Auto One Leasing in Ontario. They're actively servicing this market, and again, yeah, they're not very into international students. So that's almost about it. So it's only 3-4 players in the whole country. So I would say there's a very good opportunities for us, and with our experience on servicing all these international students, we know how to work with them and work with the dealers, and I have confidence on our program.
Yeah, let me also add, because these are great questions that have come in. So one of the important things to look at, and even when we were a private company, is that the Canadian banking, the Canadian banks are very conservative, and even when the leasing companies are offering these types of programs, the companies themselves are restricted by the bank rules. And so we have a lease line with Canadian Western Bank. So in order for us to borrow from them, we have to abide by their rules. Some of our competitors also work with, as you would imagine, Canadian banks. And these banks have very restrictive rules as it relates to the credit that flows through to our end customers. So that was a big reason that we went public, is can we raise capital from the markets that gives us more latitude to offer these types of leasing arrangements to clients that we actually think are very creditworthy, but don't fit the mark for Canadian banks. You don't have any credit history in Canada. These are often young students. In some cases, they don't even have a social insurance number. There's no visibility into their assets or wealth. Well, what most of us would know is many of these students wouldn't afford to be able to come to Canada unless they come from very wealthy families. And a lot of the folks are coming here and buying assets, homes, and they have very good allowances from mom and dad. So we look through some of these traditional Canadian credit rules, and we believe that we have and historically have seen performance here that suggests that this is actually a very good market to be offering leasing products to. So that's the competition. Is there's other players out there. They're sometimes very reluctant to play in, and primarily it's because of the flow through rules from these other banks. Our competitive advantage is in fact being a public company and bringing on investors who realize the same story, and that we can work with our investors to support these lucrative investment, these leasing opportunities.
Maybe one thing that Randy can explain a little bit on our lease end disposal losses or any repo stories that I think Randy has the reports that I'll let Randy to explain a little bit.
Sure. One of the things, and partly because of my banking background and because I've been doing various asset classes throughout my 35 years in the business, one of the things that's really unique to Solution Financial is the very low delinquency rates, almost zero, and the very, very low default numbers as well. And that was something that I really focused on before I actually accepted the invitation from Brian and Sean to join the board, was spent a lot of time looking at the actual performance of the portfolio. And it's one of the lowest default and delinquency rates that I've ever seen out of any type of asset class or through the credit spectrum. So that's really a key performance indicator that I look at as a financial services guy, is the performance of the portfolio. And I think we've had extremely low historical numbers for this asset class.
And referring to the risk of ourselves that worry about day to day, I would say the political tension so far at this my first in my first of the list. We hope that the political tension will be easy or will be lifted in the next 6 months, a year, so then our business can get back to in the 2017 levels. Although we're okay, but we hope to see a huge comeback from all these international students and new immigrants as well, right? People understand that Vancouver or Toronto is the best cities in North America for Chinese, for Asian people to stay. A lot of even older immigrants, they don't speak English. They can still live in Vancouver or Toronto without speaking any English. And when their status in China can afford them to move over here, migrate over here, I think Canada is the first free choices in the world for them to pick on.
Yeah, let me also add, because I think it's a really interesting conversation. Obviously, when I first joined, it was predominantly a Chinese community serving this niche of a client. But the reality is, even understanding why these leases are formulated the way they are, I think this is actually should be more commonplace, not just in this demographic, because, and it comes down to how people are owning vehicles. Most of us wouldn't think to even buy certainly an ultra luxury vehicle, because you don't think that you can afford it, especially in British Columbia or Ontario, where there's very, very high sales taxes. So you go buy the vehicle, you drive it off the lot, and it's common knowledge that you're losing a tremendous amount of value. Well, this story is a lot different if you're leasing the vehicle and you have a very flexible partner that you're kind of co-owning the vehicle with. And that's the interesting story here that may open this kind of leasing up to many, many other people, is that if you know that at any time you have the ability to drop the keys off, and that you've put in place, and that's what we do to secure and make sure their downside risk is covered, that there's a refundable deposit, making sure that you look after the car and you drive it very carefully and use it in a very rational way, as well as then you are only paying the sales taxes on a monthly basis. You're not paying it on the full value of the vehicle that immediately is effectively lost when you drive it off the lot. As well as if you can trade the vehicle in or move to a new vehicle every other year, and you're not thinking that I own a $150,000 car or $250,000 car. You're just, here's my monthly payment. And in fact, that's a very interesting way to think about how you own a car nowadays. So these are the things that, if you look a little bit more closely at how these leases are structured, makes a lot more sense and gives you a lot more latitude on why you might work with a Solution Financial in your car ownership structure. So that's a little bit of our competitive advantage, is knowing how to structure these that covers your downside risk, ensuring that we can move the vehicles around without being punitive, because that's usually in the leasing situation, is that you're dropping, if you want to trade in your car, you're getting dinged by the bank or the leasing company for all kinds of, oh, well, you've early terminated the lease. It's not in Solution's best interest to create that kind of animosity with our clients. We'd rather work with the clients and the car dealerships to upgrade the cars. We in fact do this proactively. So this is very much the competitive advantage for us. And the idea of introducing this into new markets is where we will see the growth, because not a lot of the leasing companies behave in this manner.
And I saw the last questions that I had is the expansion into Ontario depending on this financing. Well, absolutely, but Randy has, I'll let Randy explain about the other debt financing on by securitization if the solution is growing rapidly in Ontario. So.
Yeah, thanks, Brian. And really, we already have opened up our office, and we have hired our salesperson in Ontario, he's already out talking to our existing dealer groups, and he'll start having conversations as well this month in terms of bringing on new dealers and new dealer groups. So the expansion's already in motion. And in terms of what Brian was alluding to, one of the things that all financial services businesses, including Solution Financial, is the access of senior debt and securitization facilities. And one of the things that I've been able to do over the last 30 plus years is have build up a lot of deep relationships with the Canadian securitization players in the marketplace. We have not yet tapped that market, and that is part of our expansion plans in terms of financing the growth. So Solution Financial is, in typical terms, considerably under-levered and does not use securitization, and that's what we're going to start to bring to bear over the next couple of quarters, is bring some securitization to the capital stack.
That's great. Well, I think I think we've covered off the questions that are out there. Thank you. Fantastic questions. We're pretty much right at the 45-minute mark. So if there's any final questions, otherwise we will wrap it up. Thank you, everyone. Hopefully you learned a little bit about our story, and we're super enthusiastic to hopefully get some participation in this new issue financing, and we're available for any sort of follow-up
and a special thanks for Peter Lee that raised a very meaningful questions for us to answer.
That's great, as well as the other questions that were thrown out there are very good. Thanks, everyone.
All right. Look forward to any questions that anybody has after too.
Yes, indeed. Okay, well, we're at our mark here, so hopefully everyone has a fantastic day, and thanks again.
Okay.
Have a great.
Thanks, everybody.
Cheers. Bye-bye.
Bye-bye.